Good morning, everyone. Just a few comments on the equity strategy email that we put out this morning. So, reporting season has pretty much kicked off in earnest last week with about 13% of the ASX 300 reporting. So, obviously, the low bar for earnings was clearly evident with the bulk of companies either reporting in line or above expectations. And this is despite the median FY20 earnings growth actually coming in at negative 9%. So, which illustrates, I guess, just how low expectations were coming into August. So at this stage, we are tracking well ahead of previous reporting seasons. By our count at the moment, we've got 41% of companies beating expectations. Now, typically, we see this around that sort of 21% mark. We're also seeing about 22% of companies missing expectations, however, but that's in line with average. But to give you a bit of context on the volatility and how much of a trading market this is at the moment, we're looking about 52% of results are seeing either a greater than 5% move or a less than a negative, or greater than a negative 5% move. So 5% either way, essentially. So it goes to show you there's a lot of trading activity going on, a lot of volatility in this market. Now, it's still early days, obviously, in reporting season. As we go through results, typically the result quality historically has deteriorated. But just a few observations that I make this morning as of the results that we've seen more recently. So this chart up here gives you an idea of the preference in the market at the moment. Now, Tom talked about it last week, that clear preference for some of the cyclical names, particularly in some of those sectors that have been hard hit by COVID-19. So if you think chemicals, media, retail, travel, have all resulted in some pretty sharp reactions on result day. So if you think of the likes of the ALQ update, James Hardie, BlueScope, Seven West Media, Flight Centre, as well as all of the retailers. And the magnitude of the EPS upgrades reflect, I guess, the overly negative consensus forecast heading into the results. So that's definitely a theme that's continuing to play out, and we expect that to continue to play out. And related to this, we've called this out in the past few reporting seasons, but we are finally seeing some of the market high flies come off. So a little bit of around that is the outlook uncertainty. Whilst they might just point to certain risks in the outlook, they are resulting in some pretty sharp downward moves. So if you think of some of the high growth names, Breville, which was down 8% on the day, Seek was down 9%, ResMed was down 7%, while some of the others are just probably doing enough just to appease shareholders. So if you think REA was up 1.5% and Xero was pretty much flat. So some signs of genuine fatigue in that high PE, high growth segment of the market, which I guess doesn't bode too well for some of the high PE names going into the results with probably lofty expectations. And we've called out a few of those in our reporting season preview, namely Nanosonics, Cochlear, and CSL. But a lot of that is detailed in our reporting season preview. The other point I'd like to make is momentum's still a big driver of the market. So those stocks that have been performing into the results, so that have outperformed in June and July into August, continue to outperform on result day, surprisingly. So with the early trading updates, better than expected activity, that's really carrying through into the results. So if you think the retailers, some of the market darlings as well, Magellan, James Hardie, Treasury Wine Estate, Baby Bunting, Goodman Group, they all really pretty much got on with it at the result as well. Related to that point above, I think the market's also taking a very rational approach to the uncertainty in the outlook and the difficult trading environment for some sectors. So what we're finding is a lot of moves into some of the better quality names, clear preference for the market darlings, the market leaders. So if you look at some of the names that have outperformed during this period, on a monthly basis, the XJO is up about 3.5%, but CBA is up 5.4%. REA is actually held up 8%. Corporate Travel's up nearly 20%. Aristocrat's up 15%. Goodman's up 16%. Afterpay, whilst it's down about 2%, its peers are down negative 16%. We've seen APA up 5.5%, James Hardie up 19%, JB Hi-Fi, which reports today, up 9%, Macquarie's up 6%, and BHP up 10%. So you can see markets has a clear preference for some of the better quality names that will hold up better against the uncertainty.